Hello again, traders, and welcome out. This is Ankit from Maverick Currencies here, and welcome to this quick preview for the U.S. payrolls that's due tomorrow, October the 7th at 8:30 a.m. Eastern Standard Time. So there's a lot to break it down here. So let's talk about the possible case scenario for this jobs report and how is it going to impact the markets and the currency markets. So we are seeing a lot of moving parts to this markets here. And again, right now, good news is actually bad news for the markets. So tomorrow, as the jobs report is due to come out, the expectation is for a little better than expected jobs report. On Wednesday, we got the private number from ADP, and that was actually better than expected. And I wouldn't be surprised the numbers actually fairly decent instead of being the worst. So if that's the case, I think that would be bearish for the markets and bullish for the dollar. And vice versa, if that comes out weaker than expected, then that could be bullish for the markets and bearish for the dollar. So we are seeing that inverse correlation for the dollar and the equity markets and the global market sentiment as well. So let's do a quick currency buy basket analysis and see where things are sitting right now as far as the momentum goes. So going into tomorrow and velocity scores, so we're looking at what's moving. And as you can see, there's a lot of things that are just stuck in the middle. And right now, this is telling us that markets could move one way or the other. And dollar, again, remains strong currency. So we are seeing that continued strength in the dollar. But outside of that, what else would you want to buy if the dollar is strong? And that's, again, weighing down across the board. Even currencies like euro and pound is just going sideways for now. And a lot of movements happening in Aussie and Kiwi. So it doesn't really give us a whole lot of opportunities outside of that. So tomorrow, I think if the dollar stays strong, I think we can continue hunting in Aussie dollar, Kiwi dollar, even euro dollar and pound dollar. I think right now we are seeing this one-way move. As the dollar stays strong, it just puts the pressure on everything else. So we could look at this in both case scenarios. If the dollar comes out weaker, then again, I think pairing against anything right now would be a decent opportunity as well. So as we approach every news event, we talk about three ways of trading: enter on the news, entering before the news, and entering on a second stage. So you look at the first initial move and you look for a follow through. So each of these such scenarios has their own benefits, pros and cons. So make sure you're staying consistent with the decision making. And a lot of times I kind of go with the bias and what's the bias tomorrow. And I think right now it's kind of difficult to really gauge on what's the outcome is going to be. I think it's pretty much a one-way market. So right now, I think I'd rather wait and enter on the news. But again, if you have a better call and you think that the dollar is going to stay strong, then that you could, or if you're already in dollar crosses, then you can actually stay within that and use the stops here. But eventually, one way or the other, we'll get a bigger move. And one of the things that we talk about, entering on the news, so make sure, using a stop limit order instead of just a stop order. So that way, you're just creating yourself a little window. If you have a stop order and there's a big slippage, then it's going to fill you at that price that you might not have wanted to be, but that's really where it triggers you in. So right now, volatility is very high, which means that there's also a chance to get whipsawed in this markets. So right now, whipsaw is where, you get a big move one way or the other, and it doesn't matter if you were selling or you're buying and you had a buy stop and a sell stop. It just triggers you in and it just doesn't go anywhere. That's, again, the worst case scenario. And like I said, every market, every news event will have its own sort of price action. So that's why it's important to stay consistent with that decision making rather than just trying to go with a different decision making every single time, unless you are putting it through the process and looking at the pros and cons. So that will be the game plan here. Let's do a quick trade setup analysis and actually take a look at markets. So as you can see in the markets here, I'm actually going to start with the equity markets so we understand where we are. The markets are still looking a little bit on the weaker side. Again, we had a very nice bounce on a Monday and a Tuesday and stalling out a little bit on a Wednesday and now a Thursday. So tomorrow could be really a make it or break it. If this jobs report comes out a little weaker than expected, I could expect that actually market wants to run higher. On the other hand, if this actually comes out, the jobs report comes out stronger than expected, I think market can put resume its again selling pressure to the downside. So as you can see that there's a a decent room for this to fall, but also a decent area to break out as well. So I think this could be just a one way or the other. And this is why I'd like to enter a bit after the news event, because regardless of which way it's going to move, I think it's going to be a bigger move one way or the other. So last thing we want to do is get a little bit more whipsawed in this markets. So starting with the dollar here, and I think this is where you always need to pay attention to what the dollar or what the sentiment is going to a news event. So right now, dollar is in a positive sentiment. We are seeing, at least on a 4-hour chart, you can see we were actually pulling down a little bit, and now we're kind of gotten above. So at this point, it looks like the dollar wants to go higher. Again, remember that we still have to break out and clear that resistance to have another leg up. So right now, dollar is, again, moving not just based on the market sentiment, but again, you also have to pay attention to the bond yields. So the 10-year yields or the 2-year yields, you can see that's a very identical price action. If I had to compare dollar against a 2-year, and again, we can actually do a quick analysis here by just adding in here a US 2-year. So we can actually see the correlation there, and it's actually a very spot on correlation. You can see when this yields are rising, we are seeing the dollar rising, and when the yields flatline a little bit, this thing flatlines. I mean, it's a very identical price action. So at this point, it's all about the interest rates and the expectation and the inflation. So this is one of the reasons why things are staying where they are, because things really hasn't come off. The yields really hasn't come off. We have seen a bit of a back and forth, but we are not really getting backing off from those levels. So tomorrow, again, I think one way or the other, if the yields shoot up higher, I think they will take the dollar with it. If the yields fall, I think then the dollar will fall as well. So as a trader, you're always preparing for both case scenarios. And let's talk about, what if the dollar stays strong? What would you want to pair with? I mean, right now, I mean, you can see that we got a little bit of pullback. This dollar CAD looks very identical to what we're seeing in the dollar basket. So I think at this point, I don't really like to get long unless we break this resistance here. So a lot of these charts will notice that they're just sitting right at the support of resistance. Look at the daily chart on the Aussie dollar. This is, again, one of the charts that I've been following. As you can see, that nicely staying below this moving average, this 13-day exponential moving average. I mean, a lot of choppiness here on this level. But at this point, I mean, if this breaks below, I think that would be a breakout trade. Same thing. Now, let's go with the Kiwi dollar. We'll probably see the very similar scenario. Again, a little bit off the support, but it's still in a downward trajectory. And even if we go outside of those growth currencies, look at euro dollar. I think I like euro dollar. I mean, right now, if you can see, this is a nice little downward trend. We actually touched that downward trend line, and then we're coming off here. So this also can go one way or the other. I mean, we have a little bit more room for this to drop further. And even pound dollar, which had a spectacular rally, it's kind of backed off against the dollar as well. So you can see it doesn't really matter which currency you pick. You probably get the exact same scenario. They're all sitting up against very crucial support resistance level. And I mean, look at the dollar Swiss franc, same thing. A lot of choppiness in the past few days, which means that it's going to have a big move one way or the other. Even most importantly, let's take a look at dollar yen, because remember, dollar yen, we had a Bank of Japan jumped in and intervened in the markets right here. That was September 22nd. So pretty much since September 22nd, this thing hasn't really broken out the high or the low. I mean, at this point, it looks like it wants to break the high more than it wants to break the low. So at this point, again, watch out for the dollar yen as well, because another kind of thing to watch out for is if the Bank of Japan come in and intervene in the market once again. So that is something we'll see if this dollar yen actually breaks out to new highs. But outside of that, I think, like I said, anything that you look at, they are sitting at these extreme support and resistance levels. And if you're looking for dollar weakness, you pretty much have to reverse that. I mean, there's no better currency pair to find and see which one would probably do better. I think we'll just see a movement one way or the other. So right now, probabilities are more for continuation. But remember, breakout, this is where we need to get that continuation. We need to get a breakout there. But if this comes out on the other hand, I mean, we won't be surprised to see if that caused a rally in the dollar. You can see that these rallies can be very convincing, very full body candles. So you really have to kind of look at the markets instead of just looking at these technicals, because right now the technicals are very choppy, not giving us a good signal. So you really have to pay attention to this yields and see, okay, where do we top off, or do we even slow down there? I think as long as it stays above, or if it breaks out, we'll probably see a further continuation of the dollars. So that's the game plan for tomorrow. Again, use stop limit orders before or on the news trade. So dollar is a strong currency going into this event, so sentiment is positive. And again, US dollar likely to strengthen on a strong jobs report. So I think it's a one way or the other. Better just to pay attention to what the numbers comes out, and then see the movements off of it. So if you're looking for dollar short, I think you can pair it pretty much against anything else. But if you're looking for dollar strong, same scenario. I think you can also pair against everything else as well. So tomorrow morning, we'll pay attention to what the relative strength of weakness is telling us, where the strength and where we see more relative strength versus relative weakness, and we'll make those pairings accordingly. So we'll cover that tomorrow live in the class. Make sure you're registered for it in order to get a link, and that way you can join for this live event. So we'll be training it together. So that's the game plan. Still then, stay safe and stay disciplined, and not make too many trades ahead of this key event. So no trading until tomorrow. Thanks everyone. Take care.